Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you guys get out of it. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. I am late. I'm way late, but hey, we got some jobless claims coming up here in about 15 seconds. Is going to be some important numbers. Also fixed up our little data pipe, so we got that running. So we'll see how much disk space. When I ran it, it was like a megabyte a minute. So we'll see what it ends up being during more furious market action. Okay, so there's the initial numbers. We got the trade balance is actually slightly less than expected, which is good for the currency and the treasuries. Still waiting on those jobless claims though. Okay, 260, so right in line with forecasts. Well, that doesn't necessarily resolve the issue that we got going in the treasuries today. So let me come over here to the chart. So look up the overnight here. So yesterday, after an initial push lower, they reversed pretty hard and they are now starting to retrace some of the move from Tuesday. Was it Tuesday? So I'm pretty glad that I got out of that trade. There is just still a lot of disagreement here in the treasuries. There's people that really want to fight the Federal Reserve on this, apparently. We come over to the S&P 500. S&P 500 doing well yesterday. It's still just kind of like the top of that range, but like, hey, it's a good move. It's a good move. Oil though, struggling still. Oil's coming down. Yeah, at OPEC yesterday, the increase was like less than expected, but we still went down. Oil, and there was a draw for there was a build for the oil inventories, if I recall correctly. Natural gas having a little bit of a spike overnight. That's at the end of the day, really. Gold and silver. Ooh, that's interesting because gold and silver got hammered pretty hard on the interest rate increase, and now they are coming back with a vengeance. Meanwhile, copper is struggling. So, market may be turning back towards the we're going into a recession narrative here. Here's the dollar. Bitcoin had a little bit of a jump yesterday, but then they gave it up. So interesting action. Okay, so we've been going here a little bit. Well, let's just pull up and come back over here. I go to the Ninja Trader cache folder. It's already 3 megs. It's already 3 megs. Good morning, Octavius. You know what? I don't think I'm all here, man. Blech, my tongue is like, what the heck? You know what? Yesterday, I felt really tired at the end of the day. So, yeah. This guy, he had messaged me and he had built his own stuff in it, and it was like he had made a ladder. I think it was for Ninja Trader. Still waiting for you to write a study book or whatever you would like to call it regarding the many things that you debate and explain on the stream. It would be nice to read it. I really want to write a book. I don't know. So the thing is when I was speaking on the stream most commonly about like why technical analysis doesn't work and the nature of the informational content of markets, right? And I want to, that will definitely be in my book, right? But the reality is that those aren't my ideas, right? I didn't come up with that stuff. It was proven by empirical studies, right? So it kind of depends on which specific interest subject you're interested in. I may not have made it clear where I got it from, and so you should always ask where my sources, because I don't just come up with this stuff. Like that's the thing. The book, and I do think that I will charge a pretty penny for the book, but it is going to be all compiled from public information. It's just that for whatever reason, the retail trader market has not been able to zero in on the proven information correctly for some reason. I think it's just because of the nature of people. The nature of people is that thousands of years of evolution has trained our minds to look for patterns in things in order to predict the future, whether that was the future movements of animals or in the weather for planting crops. And so we naturally want to go to technical analysis, and that's why so many retail traders do it, I think, right? Because what I've got here, or what I would put in my book, right, is basically how to trade without technical analysis, right? But the other thing, Oceanic, is that the videos that I have are the basis of the book, right? Like, what I have in the videos gives you the key information that you really need to be able to go out and do this on your own, right? The book is going to give you like the deep down gritty details about it so that you can try to understand it on the same level that I do, right? Yeah, personally, when you say some amazing stuff on the live, I replay some of the parts or go backwards, or if I'm in a rush, I screen record and watch, digest, and write it down later. By the way, good morning, Scott Block. Well, so here's another thing. If you are doing that, can we do it? Oh, that sucks that when I come here, it doesn't show myself. Here we are. Yeah, you can. So here on the YouTube now, you can do these clips, right? You can come in and you can pick a start of a clip and an end of a clip, and they can be, I think they can be up to they can be up to an hour. Discard clip. Anyways, so if you find something like that, clip it and send it to me. Right? And then supposedly in the future, we're going to have ways where you can make other videos from clips really easily. So because there's a lot of content here on the stream that, you know, we could turn into other content to help the YouTube channel out, right? Well, it kind of is looking to me at the moment like the treasury market wants to continue just levitating up. That's a good idea. Yeah, cool. And it's cool that we have clips now, right? So too bad we don't have Win anymore. I think that her laptop died because she would definitely clip things for us like that. Especially if they're like a minute long, that could be turned into a TikTok, right? I had somebody that was maybe going to do that, but it didn't work out. Okay, so I got a couple things going on here. One is I do wonder, because that is going to be some disk performance. What our like my machine does seem a little slow. Well, we're doing good on resources. It's just like sometimes I think we're okay. Next thing is let's go down through my feed here. So we don't need Pelosi anymore. We can move that. UK projected to enter recession in Q4 2022. Recession to last 5 quarters. GDP to fall to 2.1%. Okay, how do you predict how long a recession is going to be? What's this? The Tether ultimatum. Crypto's Lehman Brothers has survived the latest market turmoil, but it has yet to quell fears about its dubious backing. If you're running a dubious financial scheme, the worst move you can make is to mock those who've asked seemingly routine questions about your operation. Taunting critics and detractors is a surefire signal that the hardened financial detectives, fraud hounds, and short sellers of the world that you're engaging in a spot of Ponzinomics. Someone Tether, the stablecoin tied to the wide-scale manipulation of crypto markets, suddenly published a blog post comically entitled "Why Hedge Funds Are Losing Money Shorting USDT." Renewed skepticism emerged, even though Tether has already been shrouded in unhealthy levels of controversy for years. Amusing headlines aside, Tether's blog post itself was a hoot. After outlining the latest market turmoil, congratulating itself for a successful deleveraging, and mocking regular finance bros for incorrectly shorting its stablecoin, Tether repeated vast untruths. The underlying thesis of this trade is likely incredibly misinformed and flat out wrong, Tether wrote. It is further supported by a blind belief in what borders on outright conspiracy theories about Tether. What were the outright conspiracy theories, you say? That the enterprise behind Tether is under investigation for bank fraud by the U.S. Department of Justice, which is true. But Tether lied to authorities repeatedly about the backing of its reserves, true. That Tether initially lost access to legitimate banking because TradeFi detected foul play. Yeah, those are all true stories. Oh, and then they mention them and they say none of those stories are true, but all of those stories are true. The truth, however, says otherwise. For starters, the belief that Tether was not backed 100% by conservative liquid collateral is not only a belief but a reality. On April 25th, 2019, the New York Attorney General released a report revealing how Bitfinex, the sister company of Tether, had lost access to $850 million it had deposited in a crypto capital corp, Shadow Bank, whose president, Ivan Manuel Molina Lee, was arrested for being part of an international drug cartel by allegedly using Bitfinex to foster its money laundering operations. In response to losing its funds, Bitfinex apparently dipped into $700 million of Tether's reserves, which should have been backing its stablecoin to fix the withdrawal problems. We're still after the New York Attorney General had released its bombshell. Tether's lawyer, Stuart Hogfoot. So this is all stuff that I think you and I both know, right? I don't know if I want to read this whole thing. Subsequently, as Concoda has first speculated, if Tether ever meets its demise, it will be through market forces, say a further crash in crypto markets in the next quarter or so. As of now, we have a long way to go before the monetary excess of the pandemic era wears off, and if Tether is to ever face its true quote-unquote Lehman moment, central banks must continue quantitative tightening and leave further rate hikes on the table. This will eventually inhibit the flow of fiat sufficiently enough for crypto prices to undergo a lethal plunge. But for now, with Tether firing up its printer to the max once again, the fiat crypto bridge has been reestablished. And I have a picture of the prince. Yes. Financial power structures have yet to restrict enough access to an already scarce amount of dollars for the gateway between fiat and crypto to become untethered. Only then will Tether face its final reckoning. I mean, I would love to see Tether die, but they keep going, and I don't know what it's going to take to make that actually happen. I really think that the government needs to step in. Let's see here. Jeffrey Gunlock. The 2 and 10-year yield curve inversion is gaining steam at 36 basis points right now, a rough road ahead. Yeah, when the previously unconstitutional income tax was put in place through amendment, the tax form was advertised as just a couple pages affecting just a few people. Yeah. A big piece of the upcoming spending package is a major increase in IRS funding. The problem is the magnitude of the proposed IRS funding is more than the revenue that funding could bring in. Think about why that might be. Okay, so that's about all we got for the overnight. They had started out with a decent trend in the treasuries. They've come back. The volatility that we're getting in the treasuries today is already pretty excessive. Already 5 basis points of movement. Oh, here's a good observation. Jobless claims were unchanged at 260,000, but continuing claims rise to 1.417 versus 1.368. In other words, the people that are out of work are staying out of work longer. What else? I feel like I'm missing something here, guys. I kind of hate how I felt like for a moment we had an extremely clear direction in the treasuries, and now all of a sudden it feels very uncertain again. I do have to say, so some of the headlines that I'm seeing here are about the yield curve inversion. And the yield curve inversion sure seems extreme, man. We had a little bit of a reprieve, but it is just insane now. I mean, come and look at this, right? The 2-year is at 3%. The 2-year is at 3%, where we were kind of saying it should. I wouldn't even be surprised if the 2-year can make it to 3.25. But the 10-year continues to be at 2.6. And like we made it to 2.8 and we came back. Well, I guess we're closer to 2.7 than 2.6, but like you see, came back down 10 basis points. the market seems to be very confident. And now, like, that's the thing, is that the Federal Reserve came out and really hammered the markets and really put them in their place. And then it's just moving back to where it was. I do kind of have to wonder, though, if maybe there's something else going on here. You know what? We should come in here and look at the FedWatch tool, yeah? CME FedWatch. Brought to you by CME Group. Okay, so there is about 60% of them think a 50 basis point hike, and 40% think a 75 basis point hike, which is about accurate. 0.75 to 3. And then what of November? 100% chance of at least a further hike, if not another 50 basis point hike. With December, a few predicting 4, but not very many. So the bills seem to be in line now. The bills seem to be right on the money about what the Federal Reserve is going to do. So it really is just the treasuries themselves. I wonder if perhaps there is some buying in the treasuries beyond just the predictions about what the Federal Reserve is going to do that is giving us an unusually low interest rate at the moment. For instance, the dollar is really strong. Like the dollar is unusually strong right now at 106. Could that be the source of bond buying? Is like all of these guys, they came over to the US currency because other countries are doing worse in many respects. And so they park it in treasuries, and that's why the rates are as low as they are. And they don't want to be in 2 years, so they go into the 10s. You see what I mean? I've noticed that sometimes when I start to clue into things like this, I'll start to read stuff about it in news outlets. So let's see what happens. See what happens on that. Oh. There's this commodities trader on LinkedIn that I follow, and yesterday he wrote a great post on why technical analysis is bullshit. I was like, so yeah, I've never come across an institutional guy. I've come across successful retail guys that use technical analysis and believe in it, but I've literally never come across institutional guys that believe in technical analysis. It's like, it just doesn't happen. I don't know how else to put it. Anyways, he was recommending The Man Who Solved the Market, how Jim Simmons launched the quant revolution. And here he says, in addition to Simon's loss of his 2 sons, he did not choose the trader or hedge fund manager lifestyle. It was a consequence. And my assessment is that it did not bring him happiness. Quite tragic when you think about this. The internet is full of stories, success stories defined in a shallow way by the amount of money people have made in trading. Juicy lifestyles of Long Island mansions, New York townhouses, and the obligatory Lambos are on full display. but often nothing is what it seems. The book on Jim Simmons makes you think about the importance of choosing the lifestyle that suits you, spending sufficient time with your family from the perspective of a trader by default, not by choice. A unique perspective and a very well written. It is a great read which will help you get a better perspective and appreciation for the good things in your own life which have little to do with money. This is very valuable. It just shows you like this guy really does it and is at the top of the game, right? Ow. I got my book. There's this book. A local guy in my area wrote this book, so I really like this guy. Well, we found him on stream. You remember him? We found him on stream, and I was like, oh yes, let's be this guy's friend because he also does music production. Anyways, he wrote this book, Fundamentals of Data Engineering, and it took forever for Amazon to get it to me, but it finally gave it to me. So today I'm gonna start reading, and I will see how fast I can burn through this. I'm going to get you a subscription of Technical Analysis of Stocks and Commodities magazine toilet. I would love that actually. Like, I mean, the thing is, and now, oh my gosh, what the heck happened to my screen here? This every once in a while, something like this will happen. There we go. You know what? When this happens, though, it usually has to do with system resources. Could be. Okay. So I'm doing okay on these resources, right? Let's come over to my disk here. It's fun to program the indicators in that magazine like programming. Yeah. Hold on a second. I'm gonna finish that thought, but first I need to make sure that like I have enough disk space to do what I'm doing here. It says I have 12 gigs left. If I come to my thing, it could have just been that when it wrote, it was big, right? Cache. So here's our file. So far, it's 24 megabytes. Okay, so it is about a megabyte a minute. But it might just be my computer doing weird stuff when it actually writes it. Anyways, I think that quantitative, so really I think that it comes down to what's the difference between quantitative and technical analysis. Yeah? I think that technical analysis is a subclass of quantitative analysis. That's what I think. I think that technical analysis is the belief that past price and volume can predict future price and volume. That's what I think technical analysis really is in the end. And quantitative analysis does not necessarily believe that. Quantitative analysis would just be doing math and statistics on data to trade. But quantitative analysis very often involves things other than price and volume, right? A lot of quant stuff comes down to fundamentals. In fact, looking at fundamental data series, making predictions off of that, or making calls on trades based on relative value from that, right? So that's where I think that quantitative analysis is like very different, right? So when you come in and you're using like Stocks and Commodities magazine, and you go in and you program the indicators and you go through and you backtest it, I do think it's fun because you are doing quantitative analysis there. And the whole thing of, going through the data and trying to make something work and stuff is a fun process. And I can, when I get into it, man, I really get into it, right? But it's just time and time again, I go through that they don't work. You know what I mean? Is sentiment fundamental? I would say so. I mean, the word fundamental is probably not the correct word either, right? Because when people think about fundamentals, they're really speaking more of the context of a stock and like what their earnings and balance sheet are and things like that. Okay. But we could include a larger host of data, right? So really what it comes down to is just data from outside of the exchange, right? Any piece of information that you can find that is not just price volume orders from the exchange that could potentially predict the price of something is useful. And sentiment is one that has been shown by many studies recently to be extremely effective, and it should be a key part of your analysis, right? Now, sentiment is kind of an interesting thing because I think that one of the places where a really good discretionary trader might have an advantage is that you kind of get a feel for how sentiment works, right? Like think about the treasury market here right now. Those like myself that were going long interest rates, how do you think that they're feeling now a day later, right? Well, some of them probably lost money. I did okay. I got a pretty good exit on all of that, so I'm feeling pretty good. But it is really frustrating to see interest rates falling again, right? So the sentiment in the treasuries has changed, and because we kind of know what the situation is, we know that like all it would take is like the right data point or the sentiment to completely flip the other way and everybody get hawkish again, right? Like if the non-farms payroll is good on Friday, right? You could see a huge move in treasuries off of that if it was good. How do you backtest human emotion and interaction? Well, but that's the thing, Dan, is that the data suggests that human emotion and interaction is not actually a huge factor. Or rather, the patterns in human emotion and interaction are not necessarily huge factors. I mean, sentiment does matter. Like I guess I kind of contradicted myself in a little bit because I just said sentiment matters, but then I said human emotion and interaction doesn't matter. But what I'm saying is that like I can come in and I can see a change in sentiment and I can see how that's going to change the stock. But I can't necessarily come in and say, well, because they were happy this day, they're going to be less happy tomorrow, just as a natural consequence of the way that people behave, right? That the supposed patterns in the way that people feel, if they do exist, are not as significant to the market as other things, right? Does that make sense? Because the whole premise behind technical analysis is like a head and shoulders pattern. Okay, people want to buy it, goes higher. People want to buy it, it goes higher. Comes, and then there's the lull period, and then people want to buy it again, it doesn't get as high. Sentiment declines, and then it starts going the other way, and you get a reversal from a head and shoulders pattern. That's the whole logic behind a head and shoulders pattern. And it seems to me like that's the way that people work, that when we don't get as high, they react to it. But what we find time and time again is that it's just not a very reliable indicator of what's actually going to happen in the short term. Right? So that just says that behavior is trivial compared to other things, right? And market structure is a huge factor, apparently. Right? That was kind of one of the surprising things, is that a lot of people thought that, oh, okay, like there might be some weird mathematical oddities about the market, you know, but they're probably really small and trivial things. It turns out that they're very, very significant drivers of what goes on, right? But the biggest driver of what goes on is just changing expectations based on new information, not necessarily the price itself. And like that's the key thing. In my opinion, the reason technical analysis doesn't work is because price and volume alone is simply insufficient information to really predict where it's going to go. Why is the book so thin? Well, in the 10-year, I think that some of it just has to do with that we've had a lot of volatility over the last few days. We kind of did get some hints that the book was thickening up, right? But then the treasuries came back the other way again. So we are getting some selling here. They're not pushing aggressively to the bottom, but I mean, it's possible that we get a downtrend here today. S&P 500 seems to be moving on something. I have so many things that I need to do, guys, and I don't have enough time to do them all. And then sometimes when I get to the end of the day, I don't end up going into them. You know, I do family stuff, which is what I should be doing. So it's not like I feel like I'm wasting my time per se. And I rest, which I also need to do. But I need to take better advantage of when I do have time. And I really need to get more efficient. Something that I've had a problem with lately is like when I have time to write scripts, I don't feel like I write very quickly. Like I might spend like 4 hours and get a script written. Okay, did they breach the regular session highs or lows? Yes, they breached regular session lows. Briefly. I can see kind of the whole treasury complex turning over off of that 26J moving down, gold moving down. Also seeing a continued decline in natural gas. I wonder if oil will get moving here. And there's definitely something happened in the E-minis, right? Like the E-minis came down there pretty quick. There was like a Bank of England survey here. I am kind of feeling like that it might not, it's a little dangerous to trade given the liquidity conditions, right? It's slow. Like the issue is that right now it's slow. So the slowness could lull you into a false sense of security. If something happens, this is going to be a monster, right? That could provide some opportunities, so we should stay frosty, but let's just understand the liquidity conditions. It's slippery. Very slippery. I mean, 2.7 isn't terrible. In the larger scheme of things, I could see a buy at 2.7 in the micros making sense. I'm feeling a little bit of dissonance, like I want to do something, even though I don't see a reason to do it. I guess just because I'm seeing the treasuries roll over. This could just be a natural pullback. I shouldn't be reading anything into that. Do I have, where's my... I don't think that I should be taking a trade in those conditions. Why do I feel like I want to? Kind of weird. Hey, Jacob, how are you doing? I think I need to just take things in. There was a decent pullback there. They came back down to the bottom. Not very much volume traded to do it. Looking at the current market, I do feel like that a short in the treasuries would make sense here. We are getting some decent trend and auto-correlated order flow to the downside. It is in line with the direction that I would prefer to see markets go. I do not see any catalyst here this morning to create it. Only possibly continued runoff from the previous 2 days. Although yesterday wasn't really in favor of the trade, right? And liquidity conditions are not very good. So no trade, even though it really does look like a good trend down. How much has it been on a relative basis? 10,000 contracts. 10,000 contracts down. That's really not a reason to take a trade, though. Saw a little drop there in oil. I've done really well this week. I mean, I caught that swing trade. That was far and away. That was almost double my largest. Actually, it was double my previous largest winner. So I finally caught the big trade and played it correctly on both sides too, because I got out at a relatively okay spot too. Probably could have made $40 more on it if I had better entry and exit, but media is talking about the Griner case going on in Russia, where that person Brittany Griner, prosecuted for drug possession and smuggling in Russia. That's a big issue because the Biden administration was trying to arrange a swap, and they were the person that they were willing to trade for her was not, the people thought wasn't worth it. Great to hear. Yeah, were you not here earlier in the week? Man, when that whole thing with the Federal Reserve coming in and saying, no, like, we really are going to raise rates though, guys. I caught that. It was a good trade. The thing that I loved about that one was that earlier, because we were arguing about, you know, the informational inefficiency of markets, and I was like, I'll tell you something that matters, right? The Federal Reserve is more hawkish than the market thinks it is, and they have a bunch of speakers planned today to shove the markets around. So once Nancy Pelosi is done landing and all that's out of the way, we can go short the treasuries. That's what we did, right? It was really cool to just like explain exactly what I thought was going to happen and see it play out to such a strong winner. Honestly, I still kind of feel like that the 10-year treasury should be up at 3%. So that's why I'm kind of, you know, if we were having a really strong uptrend, I would be sitting here being like, well, I don't know if this makes sense, right? This one, like the movement makes sense, but I'm skeptical about why they're doing it, right? The way the order flow is playing out is a little bit suspicious because there's just not a lot of liquidity. They're able to push down and through here on practically nothing. So that's hard to make a strong conclusion about what's actually moving this market and whether it will continue. You haven't been able to trade all week? Oh, that's really weird. I've never heard of that one before, and Tradeovate is usually pretty good with that stuff. But it took them more because like if I was doing this on AMP, you know, it would only take them like 30 minutes to fix my data feed. Carl Quindilla pointing out that oil is now below $90, first time since Russia's invasion. So that means we have an okay spot to try and get long oil again, right? Nah. We're going to have a recession. Let's let the recession come through and then buy oil, right? You've been waiting 3 days? What? Oh, wait, who is their FCM? Are they doing Phillips? I don't know. That's a little... Yeah, I would be a little mad. That sounds like something that shouldn't take more than a day. I mean, like, you got to give them enough time to see it and understand and react and everything, but like, a day. Oh, they're through Ninja now. Yeah. But Ninja would definitely do you that quickly. Do you call or use the chat thing? Are you talking about using the voice chat on Discord? I personally don't use the voice chat on Discord very often. Hey, this guy right here, he's giving a good message in Discord. Oh, I gotcha. I meant Jacob's problem. Yeah, did you call them? That's my first thing is that if there's a problem, I should be able to call somebody, right? If I had a problem with Edge Clear, I would just call Ian if it was a serious problem, right? I guess I wouldn't consider that my data feed's not working a serious problem. I would probably just email him for that. If it was something like I had a trade on and I was like it was causing me to lose money, then I would call him, right? Maybe the reason why I've been feeling tired in the evenings is because I'm having gut problems. I'm just realizing. Because I think I've been doing pretty okay on the sleep front. I have been working hard during the day at work. And then when I don't have the work going on, there's been so much stuff going on with the stream. Optimus is good too. Man, the guy that owns Optimus is fun to talk to. I would like to go visit them someday. I haven't spoken to him in a while. Was kind of probed about an idea, but then I don't know if it was actually a very good idea. I didn't pursue it further. Oh, really? You live in Boca Raton? Or close to Boca Raton? He's done a pretty good job, you know, because part of the reason that we started speaking, sorry, what is his name? Z? Is it Mazzy? I forget what his first name is. Anyways, part of the reason that he, I think, first started talking to me was because he wanted to figure out how to use YouTube to drive his business. And I think they did a pretty good job with it. I told him kind of some of the basics of doing it on YouTube and what I had learned, and he did it, and he did a good job with it. There you go. There's some further. I said 2.7 doesn't look too bad. Yeah, that's $20. Another thing that kind of bothered me about this trade was like the timing of it, because it kind of flipped around at the top of the hour, and it's just kind of been driving through here. The volume keeps coming though, so at what point do we say, yeah, we can just go along with that trend? It's probably too late for me, man. One thing I am noticing though is that like there will get a pullback, and it kind of makes it look like, oh, okay, like maybe they are going to reverse here and it's not a good idea to get in, but they come back down to the bottom so easily. And again, I'm not seeing like huge trades to make it happen. It's like every time that they tick down, it's less than 500 contracts. So the liquidity is making me really uneasy, and it's kind of scaring me from getting involved. The liquidity isn't really changing as we move down either, right? It's still 800s most prices. See, there was a decent pullback there. That way that's coming up makes me think, oh yeah, this could just rocket right back up to the open, right? We'll see if they do that or if they have another further drop, because it's just the liquidity is just not supporting it either way. Like, we are kind of in a vulnerable position. Like, if I felt like the market was clearly all one side and they were all going to sell, then sure, I just want to get on and write it. But the past 2 days has said to me that there's two sides to this. So I have to be, I'd want to be on the lookout. Excuse me, I'm on the lookout for an opposing meta order, and if we got an opposing meta order, it could be very violent. to the other side because of what we've probably done to the liquidity behind us. Right? Yeah, I still just feel very uncomfortable about trading this. I might be falling to a cognitive bias, like I got a good winner and I kind of want to just keep that. But maybe that's a good thing, is like I'm sitting here and I'm saying, look, if you want me to risk any of what I made there, you really got to give me a good reason to do it. And just moving alone isn't enough, right? Hopefully, at least one of you guys made money off of that, though, yeah? Here's another thing, is that oil going down, that's deflationary, so why would that cause interest rates to rise? Well, there's 2 ticks down. What about 13.5? 13.5 not breaking. Okay, though, and they just flood through it again. That time, though, it was the 5-year win. Do you see the 5-year didn't trade very many contracts? Maybe some flattening going on again. But they were traded the 14.97 for the 13.5. So kind of what I'm seeing right now is that, yeah, the liquidity is really weak. The liquidity is really weak, but there's a lot of market orders too. Like, even if the liquidity was strong, they probably could have been pushing through it. It's just, how much more is there going to be? It could turn around anywhere. I don't know if I have any reason to believe that it's going to continue through or not. I wish I had something more to move on. Let's come to Zero Hedge and see if there was any kind of headlines or stories that maybe I missed. Their top story is about Chinese drills over Taiwan and the jobless claims. The sentence for Brittany Griner, misery index is at recession levels. Amid a growing wave of corporate layoff announcements, the number of Americans filing for first-time jobless benefits rose to 260,000 last week, its 4-week average to the highest in 8 months. More problematically, continuing claims is now starting to roll, notably higher at 1.416 million, the highest since April. Connecticut, Oklahoma, and California saw the biggest rise in jobless claims, while Massachusetts, Kentucky, and Ohio saw the biggest drop in claims. Jobless claims are now completely decoupled from the headline's payrolls data. Note the chart. Yep. Payrolls continued to go up, and jobless claims are declining month over month. This matches the decoupling seen between establishment and household surveys. Notably, Andrew Challenger, Gray and Christmas Senior Vice President, said in a statement that the job market remains tight and large-scale layoffs have not begun. There are some indicators that hiring is slowing after months of growth, however. A quick glance down headlines shows at least 12 big companies have announced layoffs within the last 2 weeks. Some of these. Okay, Ultratech, I've never heard of them. Rivian, well, of course, who cares about Rivian? But 7-Eleven, 880 corporate job. Well, okay, that's not very big. Shopify 1,000 people. That's maybe significant. Vimeo 6%, Redfin 8%, Compass 10%, Robinhood 23%, Ford maybe, Geico maybe, Walmart 200 corporate jobs. I don't know if the ones that you noted there are significant, but I do kind of have to think that the jobs report is probably not going to be as good. Is today August 4th? It is. Man, Walmart has gotten just savaged lately, hasn't it? Did I not have the stream correct? Do I not have the title correct on the stream? Yep, I don't. It's the 4th. Let's fix that. Yeah, I'm sorry. When used to always remind me about that. How many days, if I go back, how many days are wrong? Man, natural gas just keeps getting hit here. And gold has continued down with the move in the treasuries. Although I have to say, right here in the treasuries, a larger slowdown than anything else that we've seen through this trend so far. I'm not quite enough for me to call it like a short-term reversal, but it's likely that it could turn into that. Not clear enough for me to be taking trades, so still no. It confused me. It was an echo, or yeah, I need to get the right day. I need to change the thumbnail. I was gonna do a some different pictures for the thumbnail, and I just was not able to do it last weekend because people got sick and stuff. But I got things to do. I've got to write a whole script, because I don't think that next week we're going to be doing the workspace walkthrough video, because that's kind of the one that I have already, and I don't know about that one. It's a little messy. I really want to focus on the treasuries. Now is a really good time to get that information about the treasuries and the Federal Reserve. I can write that well. I just gotta sit down and do it. Just gotta sit down and do it. Like, yeah, see how they come back to the bottom? It's still the best chance they've had at a reversal today. But that time didn't work through either. The S&P 500 is going now, though, of course. Must not that the open wasn't a really very big deal, because I barely even noticed when it happened. Where is... I'm kind of feeling like we could change the music here, right? I mean, I like the drum and bass and everything, but let's try lo-fi, okay? Just for a change. Okay. Well, the volume that I'm seeing in the S&P 500 is to the downside. See what they end up doing. Yeah, seen some decent trends today. Not very much of a clear reasoning for why. Wow. Oh my gosh. So have you guys seen this AMTD thing? So it was like a Hong Kong financial group of some sort, and they got listed, and within 2 weeks the stock soared 14,000%, which is just absolute. Like a 2,000% is like some of the largest winners you'll ever catch, right? So 14,000 is like insane. And then yesterday on Reddit, like the unit collapsed or something. Like there was a big rug pull, and on Reddit there was this guy that was like, oh yeah, I bought into it and lost $200,000. Makes me so mad to see posts like that, man. Like, how dumb can you be? Obvious market manipulation. Jeez, another new low. I don't want to say strong because, again, I mean, in net, it's been about 15,000 contracts. Okay. So for the degree that it moved, 15,000 contracts is not a lot. So it is very much a liquidity is light, but it's not like they're getting much pushback. I guess 1,700 there, or 1,100 at 11.5 is better than what we've had. But so I don't want to say strong trend or strong volume, but it's been a pretty persistent flow, hasn't it? Yeah, you think it's just filling the overnight gap? Well, I don't think that's what you meant to say, is it really? But you're right. It did kind of fill the overnight gap. Well, yesterday's like high from just the last pivot before the close was 14.5. There's also kind of this area 10.5. There might be some. So here's the thing is, like, if I just go back and look at positioning, right? Like, where were the last major positioning? So I always like to look at like these pivots, right? Not that that predicts what it's going to do at that point, but it's just kind of a benchmark about how strong of a trend it is, right? So now that we're getting into this period where they had spent time from before the open retracing that move, maybe you'll see the liquidity be a little bit more, the buyers be a little bit better in through here is a theory, but that's not enough for us to take a trade on still, right? And the problem remains that we didn't really have anything to predict or explain this flow. This flow was not unexpected, but it was kind of in a situation where I have a hard time knowing if it's going to go up or down, right? There's strong cases on both sides, or rather. I don't even know if I can say that, because I think, I mean, listen, I think that I'm very much on the side of interest rates need to rise here, okay? But there's other people on this other side of this trade, and their logic doesn't make sense, but they have had their moves, right? So can't just dismiss them. Oh wow, Kyla got mentioned on Bloomberg Opinion. That's cool. She's a good creator. The Vibe Session. What the heck? Who drew this picture? Who drew this picture? The Vibe Session. So you got all this stuff going on, and then there's the reality, and then there's the vibes between that, and there's us. Experience plus evidence equals expectations, which results in perception and interpretation, and that gets put back into it. So are they saying that our perception of what's going on in the economy could be completely off from the reality, but since we can't see the actual reality, it's hard for us to really know? Here's what I think. I do think that it's impossible for us to see the reality right now, because what this market is so unusual, we have nothing to compare it to. And so it could be hitting into all sorts of flaws in our models that we use to like generate our economic numbers and stuff like that, right? Giving us an inaccurate picture of what's going on. And then even if we did have an accurate picture of what is going on, what to do about it and where we're at would still maybe not be very clear, because again, we don't have anything to compare it against. It's just, it's a period of unusual economic uncertainty. But I think that the reason for the excessive pessimism among Americans, I think is different. I think that the pessimism among Americans has much more to do with political dissatisfaction. Like, when you go and you look at the consumer sentiment surveys, one of the things that kind of sticks out to me in the consumer sentiment surveys is that pessimism among Democrats is one of the big drivers, right? Democrats are unhappy with the way that their candidate has performed, and that's a large part behind the current sentiment, I think. I don't think that the average person makes their determinations about how the economy is going and everything based on, weekly economic releases, right? Data. And maybe not even based on personal perceptions, because unless you're actively being laid off or something. Are you actually going to get a higher high here now? Needs like one more tick. It's kind of weird to me. Everything at the moment is screaming growth concerns. S&P 500 down with pretty decent amount of contracts for the first 10 minutes short. Oil is continuing to drop here. Natural gas is dropping pretty hard. Now, corn is on the upswing, but copper is not. Okay, soybeans and corn are up today. I don't know. I also think that people on the political front kind of see some things happening and coming down the road, right? Like, I give you an example. In where was it? Sri Lanka. Country basically collapsed because, well, not because, but what one of the contentions is that it was because of bans on certain kinds of fertilizer. That the fertilizers create too many greenhouse gases, so they had to stop doing that, and that significantly reduced crop yields and kind of set the country into a recession. Now they're trying to do the same thing in the Netherlands, and it sounds like that the same thing is going to be coming to the United States. And when you do that, you aren't going to grow as much food. You just straight up, you aren't going to grow as much food. But you're not going to notice it right away because there's like a year's worth of supply of food that comes through. Like the food that you get, it's the prices and everything is delayed by a year. So the problem could be happening, and the public might not even realize that it's happening for a whole year, right? And it sounds like that such economic sanctions are coming to the United States as well. So you got all these people out there saying, are they trying to engineer something? Like, are they trying to engineer a food shortage? Because it seems like it's pretty obvious that it's going to lead to a food shortage, right? Well, average person is seeing this stuff on their TikTok, etc., etc. Doesn't really lend itself to economic optimism, does it? Okay, so the treasury there got as high as 16. They fell back down to 13.5 really quickly, but we're just still kind of getting liquidity holes. There was there is a little bit more liquidity at the 15-16 now that they've fallen from that. So let's see how things change. You will eat bugs, yeah. Explain where did the bug thing come from? There must have been some report or study or something a long time ago that suggested that the most sustainable food supply for humans would be bugs or something, because that keeps coming up in popular culture. Like, I think that the most prominent example would be Snowpiercer, right? In Snowpiercer, the poor people that live in the back of the train, they find out that the whole time they've been fed by bugs, that all of the stuff that they've been eating was basically mashed up bugs, and they didn't tell them that. And when they escape out of their pod, they find out that the whole time that what they were eating was from bugs, and so they destroy it. That's a weird show. But it was an interesting show. It comes back to my mind all the time. So that must mean that it was a good, effective show, even if some of the philosophical underpinnings of it are nonsense. Otherwise, the bug thing came from somewhere, man. Okay, there's 16, so they're coming back up. Yeah, I don't know. So what did I say? I said 2.7, right? Said 2.7 doesn't look too bad. They extended beyond it 3 basis points. Now it's coming back, though. It would have been really hard for me to have pulled a whole lot out of that move in the end, wasn't it? It was slippery, so there was opportunity, but the spots that it was giving me and what I was thinking about, maybe I would have made $10, $15, which given the volatility that we're having right now, we're probably really isn't really worth the risk, right? Like you don't want to be going and making $15 and then losing 30, 40, right? You heard of cockroach milk? It's a superfood. They're stuck. Oh, gross. For real? Man, this is coming back hard. This is exactly what I was suggesting, though, wasn't it? And in fact, it actually makes me want to just try and sell it on the other way. Nope. Never mind. Never mind. I don't want to mess with that. You see, you almost had me, bro. I was thinking about it. I was like, well, this looks like the opposing meta order that I was worried about. Maybe I should get aboard it because we could see some more violent action to the upside. And then what happened? You had to throw the spoofs out. Now I'm throwing the spoofs out. Liquidity is poor anyways. Do I want to be in that market? No, I do not, because one person could shove me anywhere. You gonna play that game? I'm not going to play. I'm taking my ball and I am going home because I will not play that game. Guys, do not reward the spoofers with activity, yeah? Let's see what happens. Where was it? It was 900 stacked at 18. They almost immediately pulled it, though. Now, was that to try and turn things back around and push it lower? Or was that kind of more of a warning to the buyers? Like, you probably better get out here because I'm gonna keep pushing down. I've got plenty. Now, why would you do that? You wouldn't want to. If you have plenty, you want to let them think that it's going to come all the way up. No, spoofing there does not make much sense to me. I'm not going to trade it. We'll wait 45 minutes till 8:30, and we could think about taking a trade again. But that just screwed that whole meta order up. I don't want to be involved in it. I'm sorry to say. So now I need to like start arguing about something. Get myself going. No, now all I want now, because you got me on Snowpiercer, I just want to talk about the problem with anarchists and communists. But you know what the real problem in our society is, guys? Here's what I think the real problem in our society. I've been thinking about it really hard, and I think I have a reason. And I think when I explain my reason, I think you'll see why it's a reasonable explanation. Because you'd have to think, oh, the world is complicated. There's no way that it could come down to just one thing. But this one thing is all-encompassing enough to be a part of why all of these other things that might be causing problems in society today. Okay. Here's the problem in our society today. People don't know what their purpose is. That's what I think it is. I think that we have not done a good job. I remember sitting in like, not webinars, but you know, like meetings, like at Goldman Sachs, for instance. Goldman Sachs is really good at teaching purpose. If you go to, here, let me show you. So if we come over here, we type Goldman Sachs mission, right? About us, they have, it's the first result and it says about us. Our purpose and values. Goldman Sachs' mission is to advance sustainable economic growth and financial opportunity across the globe. They know what their purpose is. And they have values that support their purpose, right? They want to have, oh no, where is it? Learn more. Our purpose and values. Client service, excellence, integrity, and partnership are their top values. Right? And these are all in line with what their purpose is, right? How are you going to create that more economic opportunity if people don't trust you, if you don't have integrity? I know that's the thing that they've been hammered on lately, but at least they're trying. At least they're trying to teach it to their people. Okay? Gonna break. Partnership is a big one too. I need to do better at this. I need to do better at this. I need to work with more people, I think. To increase economic opportunity. Well, I got a lesson. Anyways, their values are in line with their purpose. Okay. But I bet you if you went and you asked like your typical 14-year-old kid, what is your purpose? Probably they wouldn't know. Your average 14-year-old kid. I mean, here I live in Utah. Most people in Utah are Mormons, right? Mormon church has a key purpose, right? Mormon church is to bring people unto Christ, right? And there's kind of like a larger overarching purpose of life to become more like Heavenly Father is what they would say, right? Okay. So some of your kids might repeat that out, right? But like there's purpose, and then there's like your purpose. Okay. Here's what we're trying to do on this earth. Where do you fit in, right? I really identify with this purpose that Goldman Sachs has, advanced sustainable economic growth and financial opportunity. I think that's the way that our society has been so successful, is that the people before us, they focused primarily on fostering economic growth and opportunity. And that's kind of the capitalist system. And it works really well. Because even though there might be inequities and problems and so forth, the overall progress of the society is so strong that everybody benefits in the end. And the standards of living are better than they've ever been because of that, right? So that's kind of like the overarching purpose. What is our spot in it? Well, our spot is to what I'm doing here is to understand that system as well as possible, to educate other people so that they can create more economic opportunities for people. That's kind of my spot in it. And to understand the market as well as possible so that we can make the market more efficient, because that's going to foster more economic growth and opportunity. And even more importantly for me is to teach my children and give them a step up on that progress. Because if you have a kid that understands this sort of stuff and they go into college knowing these sorts of things, then they can take it so much further than I've ever been able to do. And then their children will be able to take it even further than that. And you take a couple of 4 generations down from this information, that's a tremendous amount of good that could be done, right? That's our purpose, right? That's what we're doing here on this channel. But I don't think that most people think in those kinds of terms. I think that a lot of 14-year-old kids think that their purpose in life is to have sex with everything that they possibly can. It seems like that's what the society, actually based on what people focus on, That's what you would think that the purpose is to just have as much sex as possible. That's your purpose? Yeah, I tell you what, if that's your purpose, not going to live to a very fulfilling life. This is why a lot of these kind of online gurus really rub me the wrong way. Like, I think the thing that allows me to pick these guys out so quickly when it seems like so many other people are fooled by them is because I can immediately look at them and say, okay, what is their purpose? What are they talking about? What seems to matter to them? And when they're pushing, oh, I've got a Ferrari and I've got all of these things, that's not. No, your purpose is just yourself. So you got to be careful about giving you money because you're likely to do whatever you can to just try and get the money from me, right? Probably I don't do a good enough job of this because I don't want to put my family on social media, but like if we're talking about economic opportunity and stuff like that, right? The kids are a big part of that. Probably I should be showing that. I don't know how I can show that without it being, I don't know, YouTube doesn't like it, right? So we don't do that. But you get what I mean? It's like if there was some guru coming out and the way that he was promoting his product was, look at how happy my family is. Right? Maybe that would get me. Maybe that would get me. I don't know. But you get what I'm saying? It's like, can you tell from what a person is doing and saying like what their purpose actually is? Because it seems to me that a very, very large portion of society doesn't have a purpose. In fact, I'd even go as far as to say that a large portion of our society, especially Gen Z, has determined that there is no purpose. They've become nihilists, right? And nihilism does not lead to a healthy society. I'm telling you. Almost bought a course from some guy, then he spent all week bragging about a mansion. Whatever, lol, yeah. It is. I mean, for me, I focus on the information, right? I mean, listen, I'm not filthy rich. I don't think that trading is going to make you filthy rich. I have a pretty nice room to stream in here, I must admit, okay? I have had success in my life. Not necessarily because of the trading directly, but because of the information that I've had. That can be a convincing thing. Should I use that in my marketing? I'm way more interested in the information that I can actually give you and providing you the value instead, right? It just doesn't interest me. You know, I made a really big winner yesterday. I probably should just be sitting and showing that. I did show like the trade, but I didn't show them that. Like on TikTok, I showed the trade. Here's like the trade. Here's how you could have done it. I didn't show them how much I made from it, right? Because I don't think that's it's incongruent with values, right? I like to shut my eyes and ears when people talk about trading in general, and also when random trading tips pop up somewhere on the internet. It was I made 160 on it. Yeah. I only look into it to see what others do that take baits. Yeah. You know what, Oceanic? I used to spend a lot of time doing that too. And I would say that to some extent it helped. Like, there was another trade. I don't remember how much I made on it or what happened with it, but I can remember one trade in the S&P 500 specifically, where all of these guys were talking about a pivot point, and that we were going to bounce off of the pivot point, and they were like even talking about it on Twitter, like these were like relatively large people in the futures space. And then I looked at the fundamentals and like the news, and the news said, oh, they're gonna keep going through that easy, right? And by plowing into the pivot point, it ended up, I think that alone turned it into a more profitable trade. Although it's hard to prove that that's what the case was. But I don't know. I don't think that it was enough and that it's consistent enough to base your whole trading strategy off of that. You know, it was just I've just done way better. Like, it's really this simple, guys. I read as much news as I can about the markets, especially if there's like some Wall Street analysis, right? Because don't get me wrong, the analysts are like wrong all the time, right? But there's all the information in it. And the more information that I knew, the easier it's been for me to predict how the markets are going to react to certain situations, you know? Today, for instance, a good example, I know that there's two sides to this trade and that the market is very illiquid right now. So when we saw that trend down, I was nervous about it the whole time. Like, I knew that I could make money on it, but I knew that the possibility of it flipping around on us was really high too. Okay. So look at the way that this has happened here in the treasuries. We saw a big stack at 18. It kind of pushed the market down temporarily, and now that they were above it, somebody stacked a 7,500 lot at 18.5. And because of that initial spoof, I said I don't want to get involved in this market, and you can see what happened, right? I don't want to mess with that. The way that I trade that is I'm not going to trade if they're going to do that stuff. Have fun with your illiquid market. The number's not big enough for TikTok. No, it's not. 160 is not big enough for TikTok. But you know what? Like, here's what I think happens. I think that TikTok looks at what you watch and then it says, okay, here's other people that are like you. And then it will say, oh, these other people that are like you, they might enjoy watching your content. So here's what TikTok sees. TikTok sees a guy that talks about the market a lot, but he doesn't like to watch the market. He doesn't like to watch these other gurus that are talking about the market because it's all technical analysis. And he mostly only watches cosplay girls or whatever the thing is at the time, right? I can't help it. There's pretty girls on TikTok. I watch them. The app is just so good at keying in on what it is that you like, and it's hard to look away from it, man. It's manipulative. It really is like straight up manipulative. So anyways, I think that because of that, my TikToks maybe don't reach as wide of an audience as they should, because I personally don't like to watch the market stuff. You get what I mean? Seth, on the DOM, sometimes you see big selling or buying, but on the times and sells, there are no big whales. Can I assume those are retail traders? Okay, so I'm not 100% sure what you're talking about or what. So kind of actually, let me approach it this way, Belgian. What tool are you using to see that? No, it wasn't ZN. Well, it was 10-year micros. I made 16 basis points on ZN micros. Tuesday to Wednesday. That's the single largest MFE I've ever had. No. I mean, like, you're looking at it on Jigsaw, you're looking at it on the Ninja Trader tape. How are you seeing this? Okay, which platform? On which platform? Put a filter on my times and sales to show trades above 20. In Quant Tower. I don't remember how they do it. I don't think that Quant Towers is a reconstructed tape, but it could be. So here's the issue. The way that the market reports to you is like this. Say there are 11, well, okay, there's 1333 at 20 there right now, right? If it came through and it sold it, okay? All of those contracts were sold. What will what data will get sent to you? Will the date, you would think that it would be, okay, a market order for 1300 was sent that sold through it all, right? And that's why we traded down. But that's not actually what they sent you. It's actually the exact opposite. Instead, what they do is they say, okay, there was all of these limit orders that got filled. So for every separate order that was here at 20, you'll see a different lot, right? What a constructed tape is about is seeing how the level 2 changes in response to orders that come through to reconstruct whether it was taken all by one trade or not. And then they aggregate those together to show you how big the market orders were rather than how big the limit orders were. Does that make sense? So sometimes you might see a situation where, you know, there was a big order through here, right? And they took it all at once, but then you look at the times and sells and it's a bunch of smaller orders, right? And that's because of what you're looking at. That's why the jigsaw reconstructed tape is so useful, because it shows you the size of the actual orders, right? Of the actual market orders to see. But at the same time, I haven't found individual orders to be that dominant of a factor. It's kind of, you notice I kind of have it down in the bottom corner of the screen and I don't really look at it too much. It's just kind of like something I'll come through and look at a time. Like, okay, there are relatively large players being aggressive in here, but I don't try and come in and say like, oh, there was a big market order of 5,000 contracts that I want to run with that and try and trade along with it. I don't do that, right? So, but I don't know. In this market, you can kind of see what happened, right? Like, we had a really strong downtrend that was driven largely, not really strong, but we had a very persistent downtrend that was driven primarily by a lack of liquidity. And as such, it was very easy to get it to reverse back, because it left a huge liquidity hole behind and they just got sucked back up into it. So when you look at the volume on it, right? 15,000 contracts down, completely retraced it on less than 5,000 contracts. And the volume was kind of sideways through most of it, right? Yeah, I have a 1.5 second reset time on the treasuries and a 10-second reset time on ES. So otherwise, ES just moves too fast. Well, I'll probably change that when the next version of Jigsaw comes out. I think that it might be next week. I'm hoping. So, yeah, I noticed your last bid ask trades have different numbers than mine. Yeah. Well, that has to do with the reset in the center. But do you think that answered the question? I know that that's like a really gritty technical detail, but it's like a really important to understand why the tools are designed the way that they are, right? Like once you think about it, like what if everything that it was sending you was just the market orders, and every market order was timestamped with the time that it arrived at the exchange? Then what we would see is very, very different, right? And one has to wonder why the exchange doesn't report that data in that particular way to us. right? They force us to reconstruct it instead. Kind of gives those large institutions just a little bit more room to be able to work around in. Well, the hole appears to be very clearly at 21.5. Yeah. It hasn't really created the like super strong lack of resting liquidity yet. But I mean, there is volume there and it is kind of getting stuck there. So I think that it's probably going to happen. And like I said, I'm not sure I want to take a trade until 8:30. Maybe we could try taking one, but it's kind of funny that at the moment that I was thinking, yeah, I want to reverse this flow, was about when it happened. It was a really messy trade, though. Even if I was in that trade, I don't think I would have enjoyed being in it. Yeah. So when do we see a big order on the tape? What's that then? Well, so if in my inside columns here, I end up seeing something that's like 5-10K, that's usually an iceberg, right? Oh, the one on Tradeovate has no options besides a volume filter? But why would you want to know what a large institution does? A large institution's impact is insignificant in the grand scheme of things. Yeah, you're true. I think that it would give you a much better idea of what the current conditions are, though. But I think you're right, NASDAQ killer, that, or rather, you're saying, well, this is what you said, Seth. Yeah, and you're right. That is what I said, and I think that does take precedence. That better market data would not help us compared to knowing what the future orders are going to be, right? So being able to predict what the large institution is going to do before the large institution does it is a better edge than more complete market data. But I still think that they do kind of have the market data set up to make it a little bit more difficult for you to understand what's going on, right? Like, if the market data was more accurate, we could probably make a really good, or let me put it this way, okay? If every order that was placed in the CME, whether it was a limit order or a market order, was one, the exchange side timestamp that it was submitted was given to everybody, and two, a trader ID was attached to every order, then we would be able to decipher 100% what's going on in the market every time, right? So like these studies where we found things like the square root impact of meta orders and so forth, right? The only way that they were able to discover that was from getting proprietary data sets from banks. The banks gave them the data where they could see the bank executing their trades. They could say which trades were the bank's trades in order to measure what the impact was. And that's how they were able to do those studies, right? With the publicly available market data, you can't do that. But if we had a trader ID attached to them, then we would be able to see that. And so you have to wonder, what else might we be able to discover if we had a trader ID attached to everybody, right? And then you'd be able to see like, so-and-so has a huge position on and all of these, you know, like there's a lot of things that we would learn from that they don't want us to know, right? It still wouldn't be as useful though, as just knowing what's going to happen, right? It's not about who does what, it's just about the flow it creates. Well, it is. I'm not quite sure I understand what the point you're trying to make is. The whole thing is like, I remember very early on, maybe a year or two in on the stream here, and we were talking about order flow, and I was just saying, well, like, okay, if you see an iceberg, do you want to trade against the iceberg or trade with the iceberg? right? Because an iceberg tends to be a place where you can get an easy fill either way, right? Is it better to go with it or against it? And it's always like, well, like you can see the original thing happens, then maybe they trade through it. But then what happens after that? Because sometimes you think, oh, that's a 10,000 lot iceberg. There's no way, like that's too big. That's going to cause the market to reverse. And then more market orders come and just shove right through it. That's like, and those more market orders can just seemingly appear out of nowhere. And so the issue has always been that like the future orders can do whatever they want. And you know, they don't care if it was a 10,000 lot iceberg, they can push through it. So, you know, that was the first time that I think I kind of understood that the future orders are what matters, right? And what happened here on the DOM does not put any limitation whatsoever on what those future orders could be, right? Because piece of breaking news could happen at any moment and just completely change the current situation. You mentioned some studies done. Do you have a link or source where I can access these studies? Thanks. Okay, so JF Horton, I think that the simplest study, like the one that I recommend to people to trade, or not to trade, to look at, to read, is called A Million Meta Order Analysis on Bitcoin. And in this study, they were given all of the proprietary data from Mt. Gox before Mt. Gox crashed. And they were able to reconstruct every trade that was placed on Mt. Gox in like a 6-month period or something like that, in order to see what the impact of large meta orders were. And it followed a square root law. So that's one study that I would recommend. And then if you go into that study, they'll cite all of the other studies where they had previously established this stuff. Yeah. But I have a video called The Stylized Behavior of Markets. And that's where I go into the most well-proven market behaviors and where they come from. I also cite a book that is like a really good primer on this stuff. It's called Trades, Quotes, and Prices, Markets Under the Microscope by Jean-Philippe Bouchot, French guy. It's actually one of the things that's interesting is that some of the best research on this stuff is being done in France. Can you mention that again? I didn't get this source. So look, a million meta or here, where to find it. We can just search for them. I can give you links, right? There you go. Here's the first one. So there's a study. The next thing is Trades, Quotes, and Prices, Financial Markets Under the Microscope. I visited this page so much that my smart bar just immediately gets it. So there's that. There's the book that is like the best primer on this sort of stuff. And by the way, archive.org, that's where you go to read these studies. So you could just start, once you get there, now you just start searching archive.org and you find all sorts of crazy stuff. And then here, the video that I'm specifically talking about is the proven market behaviors, order for stylized behavior of markets. And there's that one. Okay, they're kind of heading down a little bit, but it's too early. This market seems to be getting driven more by waves than it is like organized meta orders to me. Did they obtain the order IDs from all the banks participating in the market they studied? No. So what it would be like, it would be like Goldman Sachs would give them all of the data for a particular day. So they would be able to see all of the orders that Goldman Sachs executed. And they would be able to see, okay, Goldman Sachs bought X thousand shares of company ABC for a client that day. Okay. How much did the market move? Right. And then they had enough data sets of that to be able to show this square root law. For the uninitiated, what we're talking about is that the change in price from a meta order of size Q. So the change in P of meta order Q, right, is equal to a constant Y, which is consistent for an individual stock. It's different for each stock, but this tends to be consistent across stocks, times the volatility of the stock over the time period that you're looking at, times the square root of the size of the meta order over the volume for the period. So for instance, say you know that Elon Musk is going to sell X 1,000 shares of Tesla. You could come in and you could look at, Y is probably going to be, it's between 0.5 and 1. So in this instance, I think you could probably say Tesla's 0.7 times, the ATR of what Tesla had been, right? Times how many shares he was going to sell, divided by the daily volume, average volume over the last month or whatever, right? And then you would get a pretty good estimate of how far Elon Musk is going to end up moving the market. Right? That's how you use it. And this is an important discovery, especially for people executing large block trades, because now they can come in and they, Goldman Sachs can say, okay, they want to sell this much. This is how it's going to move. How do you estimate the constant Y? So the way that you estimate the constant Y is you just look at past meta orders, right? So Goldman Sachs, they executed it before one time. And so they just, solve this equation for Y and then, do the math. Right. And the thing that's remarkable about it is that on a per asset basis, this Y tends to be very consistent, actually. Right. But where it gets kind of interesting for them is that when you get this Y, like I was saying 0.7, but they'll have it like it'll be like 0.71412 whatever, right? And taking that out to the millionth place actually like matters to how much money they make. So how accurately they can calculate that matters, because basically what they do is they say, okay, this is how much we're going to move it. So in order for us to make money off of executing this for this person, this is what they have to quote for them. Right? That's how they use it. And, getting that accurate quote matters. So they have a database where every time that they've ever executed a meta order for a stock, they calculated this number so that they have a well-calibrated number for how that asset trades that they can use to make better estimates in the future. Right? Now, you as a retail trader, just note that it's going to be a number between 0.5 and 1. So for our purposes, you can just put 0.5 or 1 in there and you probably get a good enough estimate for what you're trying to do. Right? Interesting. Yeah. But Oliver, what's more interesting? The formula, or the fact that you've never heard about that formula from anywhere else? Is the wine? Yeah. Well, so if we go back here, archive.org. Here's the study, right? Where they did it on Bitcoin. And somewhere in here, somewhere in here they say they list what they found. Prototypical market. Definitions, blah, 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 meta order decomposition. This is how they split the data up. See square root impact. The Y ratio, here we go. Here's more crucial, blah, 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 blah. Y ratio distribution. So I guess they didn't even take it as like just a straight number. They actually created a whole distribution and found information about it. But you can see that it's close to 1. And in other words, what this really means is like the higher that Y is, the more impact you're going to have, right? So in other words, the impact that you have in Bitcoin is really high, right? Whereas if you're trading like a really, really liquid stock, like I don't know what it would be now. It used to be Intel, but Intel has kind of fallen from grace. So I don't know if that's the right stock to compare to anymore. But Intel is going to be closer to 0.5, right? But I digress. This was a study. When was this study from? 2008? 2015. Okay. So this study has been out now for 7 years. You've probably never heard about this. Why is it that retail traders aren't taught this? Because I tell you what, if you were trading block orders for a bank, they would teach you about this. One of the first things they're going to teach you, because this is so crucial to their job. Does the Y decrease as the price increases? Not necessarily, no. The Y is incredibly consistent for whatever reason. I think there has been some studies about like what is Y, what determines Y. But I don't think that they've made too many strong conclusions on that one yet. But it's incredibly consistent, which is to say that like if you calculate Y for a bunch of meta orders, like you execute a meta order every day for a month in that stock, and you figure out the Y or the distribution of the Y, and then you wait 2 years and you do it again, it will be really similar. The stock can change over time, but it's a very consistent variable. Now, as the price increases, the omega will increase, right? The volatility will increase. And so that will lead to, as the price gets higher, the change in price will be higher, but it will be because of the volatility component, not the Y component, most likely. Yep. Y equals 0.5 is less impact on the market because your impact is halves, or so to say. Yep. Exactly. But here's the thing that gets wild about it, okay? It's a square root. Think about it. Okay. Come on. Sometimes my pen thing doesn't want to. Y omega square root of Q over V. Okay. What if we traded 1% of the volume for the day? What if our meta order was 1% of the volume for the day? Okay. So that would be Y omega. That is omega, right? Pretty sure that means that's an omega times, and we're going to replace our Q with V times 0.01 over V, right? And then what happens? The V's cancel out. So really we get Y omega times the square root of 0.01, which guess what? Guess what that is? That's 0.1. Oh, you're right. It's sigma. You're right. It's sigma. Okay. So now you get y sigma times 0.1. Y sigma 0.1. So what is that? What does that mean? 1% of the volume can be responsible for 10% of the volatility. Do you see? Do you see? Take how much you think that your order has an impact on the market and times it by like 5 to 8. And that's the impact that it actually has. It's way higher. Your orders have a way higher impact on the market than you'd ever realize. 1% of the orders can be responsible for 10% of the volatility, right? It's insane, right? When you put it that way, it's really insane. It's really like so groundbreaking. How do people not know this? You know? Should we always be placing limit orders then? There's a good I think the question that you asked suggests to me that you understand what I'm teaching you here. It depends on what you're trying to do, right? Because there could be situations where you want to limit your impact, and there could be situations where you want to maximize your impact, right? Now, for us as a speculator, or for Seth rather, for Seth as a speculator, I think that I have a piece of information that will predict which way the price is going to go. It's better for me to try and bully the market and push it, right? Me, the small guy, I'm gonna hit into them with a market order and try and push it my way. I'm gonna try and use my impact as limited as it is to try and get the thing to move in that direction. Okay, but if I don't have any such information, I'm just like trying to take something out of the range, then using that market order kind of works against me, doesn't it? Right? I'm kind of pushing the market one way, and that might actually cause the market to go too far and then reverse on me. So in that instance, it's probably a lot better to use a limit order, right? So it depends on what you're doing, but generally speaking, the speculators are going to use market orders and the market makers are going to use limit orders. And that's the way it tends to go. Although it's not quite so that simple. I don't know how they determined this, but I remember reading somewhere that something like half that a speculator will do half and half in the 10-year. Half of it will be market orders and half of it will be limit orders. But I suppose that they do that just because that's what they need to do in order to get their orders filled. So they kind of have to utilize both. So but this is also where I keep saying, like, guys, when the market's really slow, like it's ranging and it's really slow, and you sit down and you say, well, I'm going to wait until it gets to the outside of the range here, and then I'm going to try taking it the other way, right? Well, because your orders have impact, and like there's other retail traders that are going to be doing that same thing, that kind of works against you, right? Like in that situation, the market maker really has a big advantage over you in that kind of market. So why would you try and play that one, right? The only way that I would take that trade is if I had something that really strongly suggested that like value was here. Like if I had all three of these lined up, we're in a range and they've all been trading in the range of 2 ticks. And then all of a sudden, for no reason, the 10-year goes up like 8 ticks, right? And the other two barely moved at all, then maybe I would short that, right? Because there's something that tells me that this one was out of line with the others. Otherwise, probably not worth taking, right? Whereas if I have a piece of information, especially like this situation with Pelosi, where it was like, I have a piece of information that suggests that treasuries are going to sell, But that information hasn't been factored into the market yet because of the Nancy Pelosi media circus over her landing in Taiwan, right? That's a perfect opportunity because we have something that is predictive of future orders. We have a reason for why the market hasn't factored that in yet, right? It's a really strong driver. Yep. You hit it with a market order. Nancy lands, hit it with a market order. Worked really well. No, I wouldn't say always be placing limit orders. Because if, you're a speculator, your biggest concern is going to be that the rest of the market catches on and runs away from you, right? So your biggest, the thing that's working against you the most, like really, okay, so if you have the advantage over the market maker, right? You know something that the robot doesn't, okay? The robot doesn't necessarily know that Nancy Pelosi is slanting. Doesn't think like that, right? Okay, so that gives you the advantage. But what is the thing that's working against you? The thing that's working against you is time. That the market is going to move too quickly on you. So you're more concerned about executing it as quickly as possible. Okay, so this can be well expressed in another concept I'm going to teach you here that's really advanced is this is called Almgren Chris. And what Almgren Chris is they took this information about how liquidity behaves and so forth, and to try and determine like an optimal way of executing. So there's a couple of factors that you can take in. Which direction is the market moving? How much risk are you willing to put on relative? Are you risk adverse, or are you trying to take on risk, right? And based on those factors, it would give you a schedule of how you should execute your orders. Sometimes, if you are risk adverse and or the market is already moving in the direction that you want it to go, then you want to execute it all at the beginning like this. And then it follows the square root of laws. Like the next time you do half of that and half of that, right? Until it comes down to the end, and then you're done. And that's the optimal execution schedule, right? So if you're afraid that the market's already moving in your direction, it's better for you to execute more of it at the beginning. Whereas if the market is moving against you and or you're willing to take on risk, then it's the opposite. You want to execute the most of it at the end. Right? Now you can kind of watch a market and you can kind of see how it's going based off of that. For instance, when you have a really good trend going on, it's almost always going to be the case. Almost always, without exception, when you get a really strong trend, that the first leg of the trend is the largest leg, right? Like when you're looking at, a market goes down like this, right? It's going to be like, this one's going to be 16 ticks, this one's going to be 12, this one's going to be 8, and this one's going to be 4, right? It's because of the optimal execution. That's right. They want to execute the most of it at the beginning. That's why the first trade is usually the best trade, right? So, anyways, long story short, if you're speculating, you have something that's going to predict orders, I go with the market order. Most of the time here in the micros, you notice I'll be kind of stocking it here. I'll be watching it and I'll be looking for something like, especially if I can get something where like there's not very many lots at the next price up and there's only like five lots on here, some sort of a situation where I can hit into it, that's going to clear. And then there's nothing above me for a little bit, right? So that I'm more likely to get catch the edge and to get favorable excursion from it, right? I'm always trying to catch the edge when I take these with market orders, almost always. Unless I really want a specific price. Well, the over the last 30 minutes or so, the treasuries have been in a pretty decent 8-tick range. The 10-year treasury is a little bit is still a little bit light. I mean, it's better than it was. There are some 1,000 lots out there and stuff now, but there's still a lot of 900s and 800s as well. It's better, but it's still pretty crappy. When I look at the micros though, the micro 10-year, there's actually decent amount of liquidity on this thing, isn't there? The 5-year is still really wide though. Still nobody wants to trade the 5-year. So like right here is a good example. If I wanted to sell it, I would hit that one lot at 2.78, right? Because that lot's going to be, I'm going to take that lot, right? And now if somebody else wants to sell as well, they're going to have to sell into 2.775, right? So I'm catching the edge. That's a good way to do it. And that doesn't necessarily predict what's going to happen in the long run, but it's just like those teeny tiny little things that maybe they kind of help you, right? I mean, we have math backing up why we might want to do it. Doesn't prove that particular strategy in and of itself is really that effective, but it's better than just basing it off of somebody's opinion, right? It has started to turn into a quiet day. The S&P 500 did turn down, but it didn't like snowball or anything. Yeah, there was a couple of people I needed to talk to yesterday. Bunch of messages on LinkedIn and stuff. Where's my board? Write things down so that I remember what I got to do here. Right. So you got all these things to do. I can get them all done this week, but I'm gonna have to really organize my time to get them done. I really like this setup I got here. I went and I bought like a what do you call it? A clipboard, right? And I just got a bunch of sticky notes on it. That allows me to kind of carry it around and look at it, or I could like put stuff on top of it. Notes. So right now, if we had taken that trade, we would probably, we would be in an okay place, but it looks like it has moved against us, right? Didn't have anything to suggest which direction it would be, so, but I was just trying to point out how you might be able to use a market order to your advantage. What? Don't look now, but China just locked down 1 million Wuhan residents again? Coinbase shares soar on BlackRock crypto partnership news. Jeez. As recent as this past week, parts of Wuhan and its 1 million residents are being forced to lock down yet again because, wait for it, 4 cases of asymptomatic COVID were found amongst hundreds of thousands of screenings that the province provides daily. Yuck. Here's my takeaway, guys. We're likely to remain in a somewhat inflationary structural regime for multiple years. Until China, realizes how stupid this is. And the West realizes that they can't trust or rely on China as the basis of their supply chains. Well, there was a little bit of an impulse higher here in the treasury, but very, very mild one. I don't think they were going to get too much. And you know what, here's the thing. We got non-farms tomorrow, right? Non-farms tomorrow could be a huge deal. So oh, yep, no, I already read that. Oh, that's cool. Lux is a Python library that allows easy data exploration on datasets with just the printout of a data frame in a Jupyter notebook. Lux recommends a set of visualizations that highlight interesting trends and patterns in the dataset. That's cool. Want it. How big do you think our file is now, guys? Yeah, Pelosi really sucked the air out of the room on Tuesday, didn't it? Ninja. It's now, oh, that's actually not as high as I thought it would be. 118. Let's say over, I think that it is about a megabyte per minute. Could be more than that during like a non-farms day or whatever. But if we do, well, If we say we're going to collect 3 hours worth of data, that'd be like 8. So let's say 200 megabytes a day, right? Times, let's see here, trading days in a year. $252. 50 gigabytes. That's not that much, because we can go and buy a terabyte hard drive and store this stuff, right? We're doing it. The only question is, do I want it on a different machine? No, I don't think I do, but I do think that I want like a separate storage place for it. We can just store all of the raw data and analyze it in Python. I wonder how long though it would take me to. So the limitation is not the storage, but to run through and calculate all of those, to compile all of those events and come up with an order book and all of that sort of stuff, and then output the things that would actually get placed to the models. That might be expensive, right? Running through, especially if I want to run it on a year's worth of data, 50 gigs. It will take a long time to process 50 gigs of data. So we don't have to spend very much on storage. What we need is some real processing power. Google Colab? I don't know. I don't know enough about, I mean, I know enough to like how we kind of run these models and some of the infrastructure behind it and stuff, but I don't know enough about performance that you'd get analyzing that sort of stuff, and if using Google Colab would give you better processing power than if you just went and bought a bunch of video cards for yourself. Is that like a reasonable question? If I type into Google Colab versus own video card, own GPU. Okay. BetterDataScience.com. Is a dedicated GPU better for deep learning? Question mark. Is it worth buying a dedicated GPU for deep learning? I mean, you can do most of the lightweight tasks for free in Google Colab. So is dedicated hardware worth it when you're starting out? That's what we'll answer today. Today we'll run 2 data science benchmarks using TensorFlow and compare a custom PC with Google Colab. We'll ignore the obvious benefits of having a PC and focus only on the model training speed. The custom PC sent me back about $1,300, which isn't too bad for the components packed inside. It was a 3060 Ti 8GB. Versus Google Colab has a Tesla K80 12GB. So I'm going to guess that the Google Colab might actually be faster. Look at that 200 order on GC set fast. Oh, they filled it. Oh, that's interesting. Gold has kind of moved back and forth today, hasn't it? Over the last 30 minutes or so, I'm actually going to say hour, there's been a move up in copper. I think that's kind of been accompanied by the S&P 500. I still see soybeans and corn as being the top winners today. So it seems like commodities are beating out equities indexes today. Okay, custom PC has more RAM and a more recent CPU. Comparing GPUs is tricky. RTX is newer but packs less memory, blah, 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 blah. Custom TensorFlow model. Here's the code. And then they show the results. They got Google Colab here, and then they've got augmentation. One with and without data augmentation. Oh, okay. Shorter, smaller number is better. Not even close. The RTX 3060 Ti dedicated GPU is almost 4 times faster on a non-augmented image dataset and around 2 times faster on the augmented set. So I think the answer is that we should build our own dedicated machine. I think. Well, I don't know how I'm going to do this. So here's the problem. Here's my room. I'm going to draw you a picture. Okay. Okay. And then I have 2 doors like this. Who buys 200 lots of GC? I don't know, JP Morgan probably. No, they would sell it. They would sell it. I don't know. That does sound like a really large lot on Gold D. I don't necessarily see anything too unusual in like the overall movement of GC today though. I don't have a DOM of it up. Yeah, well, but I mean, if it's being offered, I don't know. Sometimes in the market like this, especially, you can get away with it. Okay, so the way that this is set up right here, actually, I need to bring this in a little bit, and because these doors aren't nearly that big. Okay, so my desk is here. Okay. I have a hutch over here. Okay. Here is the bookshelf that you see behind me, right? Bookshelf, sign, chalkboard, right? That's my room. Okay. So the question is, if we build a new PC, what do we do with the old PC? Do we just have 2 PCs sitting here? Do I send it downstairs to the kids? Or do I like keep them for different reasons? Like maybe I could have one machine that is for dedicated for trading and data processing, and have another machine that is for video editing and so forth, right? Well, the other day I set a desk up here. That worked pretty well, actually. You could sit here and you could sit here and we were fine. But I couldn't get to the chalkboard. Didn't like that. Didn't like that I couldn't get to the chalkboard. So what I would really like to do is get rid of this thing right here and put a computer over here. That's what I did for traffic only. Oh, trading only, probably. That's what you meant, yeah. But I have nowhere to put this hutch thing. And there's like stuff, there's a lot of stuff stored in that hutch that I don't know what I would do with it. There's nowhere else in the house that will fit. I'd have to sell it and find a spot for all the stuff that's displayed in it. You get what I mean? You see my conundrum? Maybe it just needs to be a desk with a lot of storage. I don't know. What do you think? But I could just have the 2 setups and switch between them with a KVM. Just have 2 machines next to each other. But maybe I don't even really need 2 machines. I don't really do a whole lot with this machine other than trading anyways. And one, you know, it could just be churning while I'm working. I don't even necessarily need a whole new machine either, right? That's the key thing is going to be the video card. So if we get like a 4070, so that's what we should prioritize is we get a 4070. Which I have been saving for. You know what though, that kind of reminds me, oh, it's time for me to get going. But if you are on NinjaTrader and you haven't checked out my NinjaTrader indicators, you should really check those out. I was going back through my whole setup and I realized how much I really rely on them, especially the spreads, being able to see the spreads. By the way, we steepened a little bit today. Spreads are really, really useful, and it's only $100 a pop, or rather, a lifetime license is $100. But I've been putting the money that we get from that into paying people to help us promote the channel even more. So, you know, that stuff really, really helps the channel out. And I really appreciate those of you guys. And I really do think that I'm giving a lot of value for it. Anyways, I got a bunch of stuff in the video descriptions. So you check those out if you can, right? And that'll help us with some of these projects. Yeah, the index is bounced here. It kind of looks to me like they don't really want to do a whole lot before the non-farms though, does it? The treasuries kind of started out with the move, but it just very quickly got erased. I was right to be cautious about it, wasn't I? I've made a lot of good calls on staying out lately. It's only been a few where I was really like, oh, I really should have taken that one, right? So, good stuff. And tomorrow I'm probably going to be cautious because that non-farms tomorrow could be really, really volatile. So, guys, I'll see you tomorrow. Don't miss it, non-farms. In the meantime, stay profitable, friends.